What's up, traders? I'm Hotshot. This channel and video is for entertainment and my own learning purposes only. This is not financial or trading advice. Please trade at your own risk. In this video, I'm going to demonstrate a little bit more optimal trade entry setups, specifically using the slingshot, the EMAs. Now, before I get into it, I do want to address some comments. Someone commented that it's easy to cherry pick. And, I totally agree with that. It's very easy to cherry pick. It's easier to see what worked with data that has already played out to formulate a systematic approach with rules. And I'm actually not here to impress you. I'm here to show you what I see and allow you to do with what you want with that. But I was challenged to provide live entries, live exits, even streaming my trading. And I love a challenge, you guys. So soon, and I'm not saying when just yet. Okay, I'm not saying when just yet because I'm still in preparation mode. But soon I will take a funded challenge for you all, demonstrating a step-by-step approach for this optimal trade entry while also implementing the slingshot. And speaking of slingshot, I wasn't born yesterday, y'all. Do I sound dumb? I mean, like someone commented saying EMA is not new, bro. ICT even talks about them in his old videos, but he used the 9 and 18. Yes, and I'm sure many, many, many people use them too, the 9 and 18. But do you see or hear anyone referring to it as a slingshot? Have you seen anyone telling you to look for an entry when price is slingshotting while those EMAs hold the direction? I personally haven't, and I've been trading for 5 years, 4 years retail. If you have, then please, I would love for you to comment a YouTube video link or link to anything really that proves me wrong. Because as a man, I'll admit if I'm wrong, but until I'm wrong, this is my slingshot setup mixed with some ICT optimal trade entry. But then they said my video was good and that they love the back testing. I do. So to that, I do say thank you. I appreciate your compliment. I appreciate your feedback and your time spent watching my video. Now, I also wanted to, because there was questions in the comment section, I also wanted to kind of, address those questions, give my answer, and hopefully, y'all as viewers, more experienced ICT traders, smart money concept traders, y'all can kind of give your input maybe in the comments down below. Let me know if I'm wrong or what the true answer really is. But right here, what broker are you using to trade in 1 minute or lower? Because my broker's spread will eat stop loss instantly in 1 minute time frame. Now, me personally, I'm not really trading personal funds on other like brokers or anything right now. I'm only specifically trying to pass challenges. Okay, so whatever that prop firm company, whatever their spreads are, I'm working with it. I'm doing what I can with it. You know what I mean? I'm gonna find me a pair that has the most minimal spreads. And even for spreads, I like to add 3 pips to my calculations for stop loss. For the lot size specifically, I like to add 3 pips to my lot size to my I apologize. I like to add 3 pips to my stop loss pips to calculate my lot size specifically for Forex. Okay, so that way you kind of give it a little bit of breathing room for spread. Stop loss is still going to be the same. You're not going to move it anywhere. It's still going to stay systematic, but you're just incorporating a little bit of breathing room for that spread in case you know what I mean. And then somebody also wanted to, know like how would I place my order? Because while back testing, they see that price frequently spikes into the 0.59 fib level area so fast that it seems like you most likely wouldn't catch the entry without having a pending order set. And that's true. With this setup, you have to have a pending order set. Market orders, you're going to miss it. You want to set that pending limit order, that pending limit buy for price to tap into it, trigger you in, or that pending limit sell for price to tap you and trigger you in. Okay. Now, somebody also mentioned to consider using my open and close to anchor my point A and point B of the fib. And I agree. ICT did that in his ICT OTE primer video, and it looked like but then he came out with the pattern recognition series, and like I watched a lot of them, and they're all he just kind of puts them on the wicks and not the bodies. So in this video, we can do both. You know what I mean? We'll definitely demonstrate both, see if there's a difference, see if there's a benefit to either one. Okay, so we'll check that out. Um, let's see here. Someone also asked, Mr. Braham also asked, so you only trade USD JPY? And I don't. I trade the USD pairs specifically whenever it comes to the New York trading session, the 8:30 to 11 window. The USD pairs just work so well in that window. Of course, you can work with like GBP, JPY because it trades still during the New York session, but specifically USD pairs, indices, NAS 100, gold, I know gold isn't an indice, but S&P 500, US 30, those ones, but um, he asked, what did ICT say about the midnight New York Open with regards to the afternoon session? Now, from my understanding, the New York Midnight Open, that price is just something that we kind of want to see a Judas swing in the opposite direction. If our bias is bearish, we want to see a Judas swing to the upside before the true move to the downside. And that upside is where we want to look for an entry on that manipulation Judas swing. But from my understanding, you only worry about that midnight open price until 8:30 New York open time. Once 8:30 New York candle opens, that price is the one that you want to look for you to swing the opposite direction for that true move in your bias, you know what I mean, in alignment with your bias. So those are my answers. And if I'm incorrect, please let me know in the comments. Please let them know in the comments your answers. What brokers are y'all using with, super small tight spreads, things like that? This question specifically, let them know in the comments. Let me know in the comments. Now, let's go ahead and get started. Now, somebody wanted to try it with the replay mode, see how we can try to, set up. Now, I've been working kind of on a few things. Before I kind of get into it, y'all might be familiar if you've seen ICT's like 2022 mentorship. Y'all might be familiar with how he deems swing lows and swing highs. They're like candles with the wicks. That's like a swing high. That's a terrible swing high, but you know what I mean? I'm gonna use this instead. And this is a swing low. Whenever the wicks are like this. The candles can close, however, you know what I mean? The candles bodies, those are terrible candles, but it doesn't matter, you know what I mean? This is a swing low and this is a swing high. So what I've been kind of back testing and trying to see what's true is really every time that price takes out a swing high, and again, if you're new to the optimal trade entry or you haven't seen my last video, go check out that video to kind of get a little bit more clarification on it. But specifically, and let me bring up my notes, optimal trade entry is based on buying or selling retracements. So as the market makes an impulse move higher or lower, that impulse price move has to be incorporating a break in market structure. Then you want to buy or sell the retracement to capture the next leg higher or lower. Now, what makes a trade entry optimal is the fact that it will occur at a key time of day. It's a specific time window that begins at 8:30 and ends at 11 a.m. New York time. In this time window is when the pattern often forms, however, can also form before 8:30 specifically though. You want to take entry within this 8:30 to 11 time window. Somebody asked, why is it only an optimal trade entry in that time window? I see this happening even during the Asian session. And yeah, it happens during the Asian session. And ICT actually brought this up in one of his videos. He said, and these aren't his words exactly, this is from my memory. He said that those specific trades outside of this window, those ones are just fib trades. This specific setup inside of this window, this is optimal trade entry because it's during the optimal time of day. You want to work with time and then you want to work with price. So this is the optimal time to look for this price setup, okay? ICT says to focus on a rules-based approach and stick to it so we won't be confused when things go wrong. It'll simply just be a losing trade. You don't want to know what you're doing. You want to know what you're doing, what time of day you're doing it, what you're looking for, longs or shorts. And if it doesn't fit the criteria, you do not do anything. You let it go. So, and we base our framework around Fibonacci. And Fibonacci is not magic. It's the target of liquidity that is. The Fibonacci just helps us frame an underlying context. It just gives us a framework. And somebody also mentioned that they don't worry about the fibs. They just trade with order blocks and fair value gaps. And that's phenomenal. If you could do that, that's great. Reason why I like fibs is because it's kind of like an all-in-one. You have your entry level, you have your stop loss level, you have your take profit levels, and it's all just based off of a retracement. It's beautiful. I think that's, you know what I mean? And if you want to stack some order blocks and fair value gaps in confluence with the fibs, you know what I mean, to try to make your eyes or confidence kind of more in tune with the setup, then that's totally fine. You can do that too, you know what I mean? But somebody also asked, do you need a daily bias with this setup? And, you know, I wouldn't think so personally, simply because if you're using the EMAs, they also give some direction. Sometimes they can fake you out, and that's totally okay. Just manage your risk. But ICT teaches this to target the previous day's high or the previous day's low if you're bearish, the previous day's high if you're bullish. Okay. So somebody mentioned that as well. And that's fire, but sometimes price is just way beyond that. You know what I mean? Previous day's high. Price is just way beyond that previous day's low. And at that point, what do you target? Do you target back that way? Because it's not very clear from what my understanding of the optimal trade entry is. So you can possibly answer that in the comments down below. But from my understanding, really displacement is key. Okay, displacement and the breakup structure. So step one, you want to wait for time, which is 8:30 to 11. Step two is your kind of just drawing this from memory, I'm not gonna lie. Step two is your breakup structure with displacement towards a direction. Step three, you want to draw your fibs. Now, something that I've also kind of been back testing and kind of doing a little bit more in-depth research on is the breakup structure on every impulse leg and running the fibs off of every impulse leg. If that gets stopped out, you drag it to the previous one. Now, this is where those 3 candle swings come into play, okay? So like, for example, let me just go to an example really quick. And let me go to the 5 minute because ICT does teach it on the 5 minute, okay? But I see this so clean and there's so many setups during the 1 minute. And I'm trying to personally work on just trading between the 8:30 and 9:30 time and seeing if there's a setup during that time. But specifically, like you can see here, there's this impulse leg, this breaker structure that broke all this structure over here, all these highs. This is where you would drag your point A of fib to point B of fib. And if you don't have the Fibonacci levels already, these are them. Now, the only one that I've changed, y'all, since the last video is the 0.17 level, and that's the first take profit level, okay? Why did I change it? Just from back testing a little bit more, I've seen that whenever price makes its move, it'll tap right here cleanly, and then it'll like move away if it doesn't want to run out that high, you know? So I kind of moved it a little bit, not too much. If you want to keep it the same, you can. If you want to move it to mine, it's awesome. Now, you can see that price broke structure here, did not trade into optimal trade entry or anything like that, right? And the price broke out right here. Now, where would I draw fibs from this time? Well, I'll draw them from this swing low up to the new swing high, which is right here. But you can still see that it didn't give an optimal trade entry. And this is why I say the 5-minute ICT says you're not going to get a setup on the same pair every single day. With the 5-minute, you'll have a setup on some asset class, right? But I want to focus on one. I don't want to trade a bunch of different assets. I want to focus on the euro dollar, or I want to focus on the Aussie dollar. I want to focus on one specific pair, right? One that just solid, you know what I mean? This is why I want to utilize the 1 minute, because you can see we don't have any setups here on the 5-minute within the 8:30 to 11 window. But if we drop to that 1 minute, let's drop to that 1 minute real quick. Let me just take off these fib levels. Boom, boom. Let's see what that 1 minute was working with right here. Now, you can see that once price had this expansion leg, took out these highs, right? Now, where would I draw my fibs from? Well, with those 3 candles, that's where I would draw it from. The expansion, I wouldn't draw it all the way from the origin over here or here. I'd follow these swings, right? And equal lows, like right here, if you look right here at the L and the price level, you can see for this green candle, 0.9952. For this black candle, 0.9952. I consider this green candle to be the swing on equal lows, right? So I would draw it from here up to this high, right? And look at that, price tapped us out, which is totally okay. This is why you manage your trades. What we are going to do now, we're going to drag this point, the point A, I call it the point A to point B, because you're going to drag your point A up to point B, vice versa if you're bearish. But you're going to get your point A, you're going to drag it to the most previous swing high. And where is that? It is right here. So we're going to drag it right there. And look at that. Optimal trade entry. It's not in the 8:30 to 9:30 window, bummer, but it's totally fine because it's within the 8:30 to 11 window. Now, you would have, like right now, whenever we had it set right here, I would have my limit order. I would have my limit order set, right? And you can see it got triggered in right here. Stop loss was right here, but it never came up to our take profit, right? Which is like a 1-to-1 right here. It never came up to our take profit. Instead, it stopped us out. Now, at this point, what we do is, again, we drag it to the most previous swing low with the 3 candles. And if it's trading within that area, that's whenever you market buy. That's whenever you just buy. You're on the charts, you're right there. You see it trading in that area, you buy. As soon as it stops you out, you guys, you drag your fib and you're like, okay, is it in an optimal trade entry? If it's not, like, let's say that the swing low is down here, right? If it's not, see how it's at the 0.5? Our entry is a 0.59. If it's not, then we wouldn't market buy. We just set another limit order, okay? And stop loss would be down here. But you can see that we are in our optimal trade entry. So we're going to market buy right there, right? Market buy, doesn't matter where price is, boom. Stop loss is always going to go at the 1 level. Take profit 1, where we take off partials, is always going to be at the 0.17 Fibonacci level. And it's going to be at about a 1-to-1 risk to reward ratio, okay? Take profit 2 is going to be the negative 0.25 level. You can see that it got tapped, and this is about a 1-to-2 R. Take profit 3 is a negative 0.62 level. And that right there is about a 1-to-3 R. And you can see that it got tapped. Now, right here is where price ended up kind of turning around. It didn't get to 1 full standard deviation, but I'm happy with the 1-to-3. I'm sure you'd be happy with the 1-to-3 as well. But you can see there was no setup on the 5-minute, but the setup on the 1-minute was right here, right? Now, with that being said, somebody else also mentioned that they can see like the 2022 model within these setups too. And you totally can. But I took a funded challenge with the 2022 model, and I don't know if I was just applying it wrong or if, it's flawed, but dude, I didn't pass. I lost a lot, and I was only focusing because ICT like specializes in the NAS and NQ. He That's what I was focusing on. And bro, it just wasn't great. But this optimal trade entry is phenomenal. I really like it a lot. Now, let's say like you have your EMAs, right? Look at it didn't trade into an optimal trade entry on the 5 minute if we had our fibs like this. But look at how it slingshotted and the EMAs held the direction. Now, what could you do right there? Well, if you wanted to, you could take your entry off the 5 minute with the order block. It did run out liquidity. Boom, had a big up move. Maybe you can like look at the 15 minutes, see if this was like a breaker pattern or something. Like maybe this you can consider this your breaker, and then there's your breaker block for the entry. But it's totally up to you. There's many ways to look at this setup, but you can see the slingshot was here, right? And then even like on the 1 minute, we could see if there was any slingshots within that area too, within it. If we look at the 1 minute, wasn't much slingshots. There was a tiny one right here, and that was the first move where we took entry off of. And you can see it didn't reach a 1-to-1 R. It tapped us out, and you're gonna lose sometimes, right? Now this one right here, this is a sell, but it wasn't in line with our true Fibonacci. You know what I mean? You want to make sure that that is in line with your true Fibonacci. Now, let's say, I don't know why bar replay cannot be connected, but let's say right here, for example, right? Price began moving away in your direction. Okay. Now, what I've been back testing is every time that it takes out, even if it's internal liquidity and the external, like within the external liquidity's range, even if it's internal liquidity, I'm drawing a fib off of it, right? I'm drawing a fib. This is my swing low up to my swing high. It didn't tap, right? Now it took out the highs here. So I'm going to draw from the swing low. And I'm going to delete this, y'all. I'm going to delete all this really. I'm going to kind of clean it up. So, and I'm going to take off the 5 minute. So it's cleaner. So it took out right here, right? It took out the highs, this high right here with this leg. So what am I going to do? I'm going to draw my fib. Where's the last swing since then? It was right here with the 3 candles, right? I'm going to draw it up to here. And you can see if we had a limit order set, we would have got stopped out, and that's totally okay. Again, we're going to drag our point A to the previous low. It got stopped out. Now we're going to drag it once more. This is the last time that I'm going to drag it, right? I allow myself 3 losses. Let's say that we lost on that first one. Let's say that this one, it wasn't already ran through it. Let's say that this one wasn't ran through just yet, and we took another trade, and then it stopped us out. That's 2 losses. I will allow myself 1 more entry. And if it stops me out again, that's 3 losses. I'm done for the day. This wasn't my setup. But if you allow yourself that third time's a charm, you will very likely make back your losses that you took on the first 2 setups by just dragging it to the last previous low. As you can see here, boom, it's with an optimal trade entry. And we got stopped out. So we're already on our charts. I'm going to mark it by, boom, mark it by. Stop loss will always go at the 1 level. First take profit right here, got smashed. You could take your 1-to-1, you could take partials, or you could just leave everything running. Take profit 2, got smashed for a 1-to-2 R. Again, you can take your full position, claim partials, or just leave it running and just target a 1-to-3. Again, boom, negative 0.62, got smashed about a 1-to-3 R. Here you could close fully, you could take some partials, you can do what you want as a trader. 1 full standard deviation got smashed. And if you notice, 2 standard deviations got smashed. And I like to say, if you got some hair on your chest and you're just ballsy as hell, you're just a badass and you want to hold for this, you know what I mean? 2 standard deviations, you'd get paid for sure. This is a 1-to-6 R, and you can see that it played out very, very nicely, very handsomely. Now, again, why do you got to stop there? You know what I mean? You can see that price took out this swing right here with this impulse move up, break a structure. Now I'm going to run my Fibonacci from the last previous 3 candle swing low up to the swing high. And it didn't tap, right? It didn't tap, but we're still within the window. let me go ahead and you can see that it got ran through right here. If you drag your fib right here, boom, boom, to this new high, set your limit order. As soon as this swing high is formed after this third candle, once these 3 candles form, set your limit order. Boom, limit order set, and you can see price tapped into that. You can see that one standard deviation got smashed, 1 to 3R. Now you can see on the 1 minute why I say trade it on the 1 minute versus the the 5 minute, because on the 5 minute we had no opportunities, but on the 1 minute you seen we had one opportunity here, got stopped out. We had another opportunity here which played out very nicely. You know, it was a beautiful setup. We drew our fibs from right here up to this high, and we took entry from here. Stop loss was here. Take profit, you know what I mean, whatever you wanted to hold to, it's totally fine. But you can see it hit about a 1 to 3R. This one hit a 1 to 6R, that's 9%. And this one hit a almost 1 to 4R. That's nearly 13%, y'all. That's pretty much 13%. Like, I'm telling you, on the 1 minute is where it's at. Now, majority of slingshots, like a lot of them won't be in that optimal trade entry, and that's where you filter it out. That's where you filter which slingshots to take. Is it in the optimal trade entry? That's where you filter it. You know what I mean? I wanted to give like more examples of this, but I feel like this video is already super long, so I'm gonna make separate videos with more examples. But I hope you guys receive some value from this. I really appreciate y'all watching. If you stood till the end, thank you so much. Again, you know, drop some comments if you have questions. We'll, you know, answer them in the next videos. And until next time, thank y'all for watching. Hotshot out. Oh, and don't forget to like the video. YouTube algorithm appreciates it. Later, y'all.